Let's find out what Moshe Katri as well makes of it. Thanks for taking time out and joining in. I'm going to start off where Anisha ended, that more than the numbers and more than the expectations that it could be seasonally weak, commentary is going to be on top of mind for investors in Q3. Do you agree?
I do. I think this is going to be a muted quarter for the industry. As your colleague noted, this is a seasonally weak quarter for the industry in general. You have the impact of wage hikes, you have the impact of furloughs, FX could be an issue. It's interesting because I don't know if companies have a full view of calendar 24 budgets. So maybe the commentary will be relatively conservative about the next few quarters. I think when you look at the industry today, you do have to look at it from two different perspectives. One would be the next few quarters that are seasonally weak. And then the second one is assuming we get to a point where the Feds are done raising rates and will start maybe cutting rates, you'll probably see better budgets for calendar 24, i.e. better discretionary spending. And on top of that, you also have to be looking forward for the conversion of the large deal pipeline that was won throughout calendar 23. The issue that we've had, what we heard from companies, is that a lot of those deals are not converting as quickly as expected. So they'll not necessarily be contributing to December, may not contributing to the March quarter, but we'll start seeing some of that contribution falling through the June quarter. And then the final point, I was reading somewhere there's about $16 billion worth of deal renewal activity that will be benefiting the sector throughout calendar 24. So again, these are all good, positive developments for the sector, but you're not necessarily going to see that reflected in the P&L probably until the June quarter.
Moshe, let's talk about TCS in specific. The ET Now poll suggests that they're likely to maintain their deal win run rate of about $10 billion. Do you think that the improved utilization will be able to offset the BSNL deal impact?
It's possibly. It is all possible. But again, the headline's going to read, 8 to 9 billion, which is what you're saying in terms of bookings. But again, the question should be, when do we start seeing those conversions coming through? And as I said, I don't think that happens before the June quarter.
Moshe, if this entire debate on AI versus traditional IT is there, do you think in hindsight, when we would be discussing this in 2025 or 2026, this would be passé? I mean, it reminds me of similar conversation a lot of folks have had when Y2K got implemented, or for that matter, when IT companies, they moved from enterprise to SMAC and SMAC now to digital.
Yeah, we view AI as a really important, I would say, tool that helps you more on the, on the cost takeout side of the business. And in our view, this will continue to be viewed this way. As you indicated, the industry itself has been very effective in terms of looking through automating some of the more mundane functions. This will be another productivity tool. We are hearing that AI-related savings are beginning to get incorporated in deal flow, in RFPs, where actually enterprise clients are looking for, cost savings that are AI-driven. I think this will probably get you another one of those cycles, good cycle, I would say positive cycles for the industry. Remember, cloud was a cycle. Initially, everybody worried that cloud is going to cannibalize revenues. It hasn't really happened. And I'm assuming AI is also going to get you that, revenue growth cycle for the industry. Is it going to be as significant? It's too early to know. But I would say that the industry will know what to do with it and how to sell it to clients and ultimately generate incremental revenues from that.
Moshe, appreciate your time.